Hey folks, welcome back. Quick little ditty on the cable this morning. As some of you know, that it's non-farm payroll week. So this Friday we have non-farm payroll coming out. And typically what will happen is on Mondays and Tuesdays are the best trading days. And Wednesday, Thursday, and Friday tend to be a little bit iffy. In my experience, I've learned that it's better for me to be at least active at the beginning of the week and then cool my jets as we get closer to Wednesday's New York Open. I don't want to promote the idea that you can't take any trades, obviously, because it's just my personal opinion. It's my own personal approach to analysis. So I don't want to sway anyone's opinions or, because in the past I've said, you shouldn't trade on Mondays. And few of you have taken that as the gospel and hardlined it and said, I thought it's not profitable to trade on Mondays and show on social media where a Monday's trade is profitable. Again, I'm not trying to encourage that type of reaction from other people, especially folks that aren't really interested in what I'm sharing. I'm just giving you my personal interpretation of price action. I'm not right all the time, and when I am right, I can justify why it was correct. When I'm wrong, I can also find out why relatively quickly what went wrong. But that's the distinction between myself and most retail traders. Retail traders don't have a clue what they're looking for, and when they're right or wrong, they really don't know how to attribute it to specifics or details. And you need to have the details, okay? But we don't need details to the degree of precision. Even though I kind of promote that idea in my analysis, you don't necessarily need it. And when we talk about optimal trade entry, it's a pattern that is very versatile. You don't have to have yourself chained in front of the charts all the time, but you do have to know where the market's most likely reaching for. Okay, so I'm going to give you a little bit of a treatise on that. So looking at the cable last night, okay, I'm going to put the day dividers in here, you can see. And here's the beginning of a new day in Asia. And the market was dilly-dallying around in a small little tight consolidation. Now, my personal expectation was we would see higher dollar. So therefore, if the dollar is being pressed higher, that's going to suppress foreign currencies or make them more likely to go lower. It doesn't mean all foreign currencies are going to go lower. It doesn't mean all foreign currencies are going to go lower, but they predominantly should go lower if the dollar's bullish. So what I was looking at is the tendency for cable to want to drop lower, clear out some liquidity, and reach for lower prices that haven't been seen for a while. And I'll outline that in a second. But for now, I kind of want to give you the same question I started the video off with. It's a screen capture of the Asian session last night during this small little consolidation. After these equal lows in here had been violated, okay, it rated it and went back into the middle of the range. I want you to look at this. Okay, we have an old low here. And the market had traded essentially around this level. Above, below, back to it, hanging around, resistance, resistance. So I viewed that as a point of equilibrium. Okay, and since I'm bearish, or was bearish last night, I wanted to be a participant of this move, but truth be told, there's a lot of personal things going on in my life, and I'm exhausted, I'm tired. So I didn't want to get up at London, I didn't even want to get up at midnight to check anything, but I wanted to participate. So what I did was I went short, right at the market, right at equilibrium. The expectation is that we would see this big dramatic move right here. Think about Sniper Series. If you haven't seen that yet, you will be able to see it this month. I'm bringing it back on my website. And here's optimal trade entry. Okay, using the bodies of the candles as I referred to in the OTE primer. It's on YouTube. You can watch that video. Optimal trade entry right in here. 62% retracement level, 70-point 5, and 79%. Okay, they're my specific levels, how it's set up, and I'll teach you exactly how to put that in your fib or MT4 or whatever platform you're using. So my expectation is I knew I wanted to be short, and I knew that the likelihood of upside should be relatively limited. And I focused on the approach of my concept of power 3. Okay, and what that is my expectation was to see, and this is not the scale, folks, so just so you guys know. I was looking for this formation on the daily. Okay, so in other words, think of this as a daily candle or a daily bar. And the open is right in here. Here's the opening price. And I wanted to see it rally up, but I didn't want to mess around with missing the move, and I didn't want to worry about whether or not I'm going to get in it or not, or miss a real good entry. I don't really care about a real good entry if I know the likelihood is it's going lower. So I want to get in around that opening price, or if not higher, if I'm going to be shorting. So this is ICT Power 3, and I got a video that teaches that, but the opening or above it is where I want to be selling short on bearish days, and I want to capture the lines portion of this move here. I don't care about getting the low. I got tools and techniques that give me the idea where this price may be, but I don't care to actually have it as my exit. I do want to exit somewhere below the midpoint of the expected down range. Okay, so in other words, whatever I think the total daily range is, my objective is I really want to be at 50% or below that for my exits. That's my personal model. I want to be doing that type of thing. And then I'll leave some pieces on to see if I can get these types of prices down here, but mostly I'm not always getting it. So to be honest, that's really what it is. And 600 and some of you have seen that day by day, where if I am right, I'm not always holding for that last piece of the pie. I could care less about being that accurate. Besides, my portion is so small, it's insignificant at that point. The premise is you want to be profitable, not perfect, because perfect is unrealistic and you'll never get that. But profitable is realistic and it can be obtained. And that's all I'm trying to promote the idea on. Now, I can't promise you profitability, and I can't promise you that what I'm teaching you is going to give you profits, but over time, you'll learn what approach to using the optimal trade entry you'll like to have. Okay, so let's go back to this. I want to be short above the opening price, which is here. And being short, I wanted to know how much of a move this power 3 high would be. So if we look at that in the scope of, I thought that you guys would appreciate this. But this is a 30 pip range, and I'm going to apply it to the opening price right there. Right there. Okay. So here's the opening price, 30 pips above that. It takes us above here. So my stop has to be above here, preferably up to this point here. So around 32.61, 32.62-ish, something like that. That's where my stop has to be. So I could be a seller down here, right during the Asian range, not give two spits about how far it's going to go up, if it's going to be a dramatic spike up, or if it's going to be a lethargic drag on the way up to that price point. But I don't want to be worrying about getting stopped out, and I just don't want to be up for London. So I want to get some sleep. So I wanted to participate. I did a small little one standard lot, and I didn't care too much about making much more about that position than that. Simple. So my expectation is I want to see it reach down to a specific price level. Okay, now here's the myth about trading that I got wrapped up into when I first started. The entry's the most important thing, and it's not. The entry's not the most important thing. Knowing where the price is most likely trying to go to is what's most significant. So if we go out to, let me take this off here and wrap this video up because I don't want to be too long. If we got to a 4-hour chart, okay, do you see this consolidation here? We rallied away, small little consolidation, rallied away again, and then we have a climax high, retracement, lower, retracement lower, retracement lower, consolidation, inside the consolidation over here, and what would be resting below here? Sell stops, okay, sell side liquidity. So what we have here is a market maker sell model, okay? So what I was using was, last night, I knew we were in this area over here with the expectation of targeting the liquidity resting below the consolidation over here. So I wanted to pair up my orders with what would be existing in the marketplace in the form of sell stops. Why would there be sell stops resting here? Because this is the last intermediate term low prior to this run up that trailed stop losses would be placed right underneath. And they're going to target those individuals with that run. You can see it's happened here post trade, but I'm going to go back into a 15-minute time frame and apply what everything looked like to me in my mind. Okay, and this is what it looked like. This is how I interpreted price at the time of my entry in here. Okay, and I'll show you what that looks like also. We'll just do this. I'll throw on the last portion of that move. You can see there's been no other trade since my last euro trade. So I'm practicing what I preach. I don't want to be trading a lot during the non-farm payroll week. So there's my entry right here. And there's my stop loss being tagged. Okay, it got stopped out right there. Trailed it up really, really tight because I didn't believe it would be worth holding any type of bounce in here because we had an ADR low and it's not from payroll week. So it could have easily came down here, hit this, and then chopped back around, and I've given up a lot of the portion of the move. You can watch in the video, first couple minutes of this video, I was scaling out at logical levels and trailing my stop loss tighter and tighter and tighter. And I don't always try to gap out at the ideal scenario because the ideal scenario doesn't always pan out for me. I live in the real world, so I've been hurt many times trying to get the absolute best exit. To me, this is favorable. Okay, so now what we're looking at is this is the 4-hour market maker sell model liquidity pool. Okay, which is that consolidation I showed you on the 4-hour chart. That level is that low, and then below that, 20 pips or so takes us down into the 31-32 level. So in that area, that takes us about 20 pips or so below the low. And depending on your data feed, you're going to have a slightly different number in terms of what 20 pips would be below that. But you can see how, look how they're consolidating around there. Now, it could drop one more time lower. I could care less. I'm already out and flat. I can't make any more money. Can't lose any more money. Long and short is, this is where they're accumulating all the orders that are residing underneath that 4-hour low. So it's a liquidity pool below the market maker sell model. Okay. So my expectation was, again, at the open, I was willing to absorb whatever upside would be, but I was willing to allow it to go up to this point, which is the reason why I had one standard on. So shorting here, allowing price to go up to this level to be stopping me out, but really the expectation is this is where I thought price would go up to during the London session. This starts the actual London session, which is 1 o'clock in the morning New York time for me. This is the London Open Kill Zone, ICT Kill Zone. There's a lot of folks using those buzzwords on YouTube Kill Zone, Power 3, and they're not teaching what I teach. Okay, I created my own names. Okay, I had to create a vocabulary. So please don't be confused if you see other people using those terms. Kind of go back to, if you're going to be looking at anything I'm teaching, kind of go back to what I teach with it, because they've become real buzzwords and institutional this and institutional that. So long and short is, it went right up to the very beginning of the ICT London Open Kill Zone, 1 a.m. in New York time. Nailed it perfectly, right at the 62% and then 70%, 70.5% rather. The bodies went right to 62, but the spike up in here on this particular candle, let me zoom in a little bit, you guys can see it. Okay, you can see it went right up into the 70.5 level right in here. Okay, and ADR was hit, and this is where all my objectives were filled, at this low or just below it. Again, I'll show you what they look like again here. You guys can see it there. And this is a limit order I was going to try to add to that short on the euro the other day, and just didn't get tripped, so that's why it was canceled, in case you're wondering what that was. And that's it, folks. Optimal trade entry was the idea that may pan out, but I didn't want to be in there. And honestly, I could have had my orders at 62% retracement level or just below it to get filled, but it could have just simply rolled right over and went lower, and I would have never gotten filled. So when I have instances where I feel that's most likely going to happen, I just go right in at the Asian range. Don't risk a whole lot. Don't put a whole lot of leverage on. Determine where the projected high may be based on power 3. And you can see this is what we're looking at here. Now I'm going to change this to a default so you guys can see a daily candle, and it'll be exactly as I just described to you. And we'll change it to a bar chart and zoom in, and there's the power 3, the opening price, small little rally up, usually about 30 pips or so, and then it drops down, creates the low of the day, and comes off the low. There it is, and there's the consolidation on the daily chart, targeted that liquidity right there. So everything moves algorithmically, and there's a rhyme and reason why price does everything it does. There's nothing ambiguous about it, and there's nothing that is mysterious. We can come up with all kinds of clever ways to make it sound mysterious, but it really is as simple as looking for liquidity. So hopefully you found this teaching and video insightful. If you like what you saw, leave a comment on Twitter at IamICT. And until next time, wish you good luck and good trading.